Have you ever wondered if you could buy into a whole business empire, but, get it on sale? Well, today we're digging into a fascinating company from the Indian market called Bajaj Holdings. We're going to use a great report from Web Cornucopia Finance to figure out if this is the real deal or if there's a catch.
I mean, really think about that question. Imagine getting a piece of some of the biggest, most successful companies out there for less than they're actually worth on paper. It sounds almost too good to be true, right? Well, that's the big puzzle we're trying to solve today with Bajaj Holdings.
So how is this even possible? Well, it's all thanks to this company, Bajaj Holdings. Now think of it less like a company that actually makes stuff and more like a special key, a key that unlocks the door to the huge and very influential Bajaj business group, especially its financial giants.
All right, so let's get into it. To really understand the potential opportunity here, we first have to get our heads around the company's business model, because it's pretty unique. It's probably not what you're thinking.
You see, Bajaj Holdings is what's known as an investment holding company. Honestly, the best way to think about it is like a master art collector. This company doesn't paint the masterpieces itself. Nope. Its entire business is to own huge, valuable collections of other companies' shares. Those are the masterpieces, and it generates its wealth from just owning them.
So if it's a master collector, how does it actually make its money? Let's pop the hood and take a look at what really makes this investment engine run.
The engine is actually super simple. The company's lifeblood, dividend income. We're talking almost 80 cents of every single dollar it makes comes directly from the profits of the companies in its collection. The rest is mainly interest. It's a really straightforward cash-generating machine. And what masterpieces are in this collection? Well, the portfolio is really built around two absolute giants, the crown jewels, Bajaj Finance, a monster in consumer lending, and Bajaj Finserv, a powerhouse in insurance. So owning Bajaj Holdings is basically a way to indirectly own a big chunk of these market leaders.
Okay, so owning great companies is one thing, but is the holding company itself, financially healthy? Let's do a quick checkup based on what the report found.
The report gives us a really balanced picture. On the plus side, it's very profitable. It has a solid return on equity of 12.8%, which is just a fancy way of saying it's really good at making money from the cash invested in it. Plus, its own running costs are incredibly low. The flip side, of course, is that its success is directly tied to how well the stock market is doing.
But here's something that really stands out as a major strength. Just look at that number, a debt-to-equity ratio of 0.08. I mean, this company is practically allergic to debt. This makes it incredibly stable and flexible. For any investor who values safety, that is a huge, huge plus. And all of that brings us to the most interesting part of this whole story, the valuation puzzle. This is where that idea of buying an empire at a discount really snaps into focus.
Okay, first, let's look at the raw numbers. If you were to add up the value of every single asset Bajaj Holdings owns and then divide it by all its shares, you'd get this number, 11,585 rupees per share. That's its real intrinsic worth on paper.
But, and this is the big but, when you actually go to the stock market to buy a share, you don't pay that price. You pay this, 10,250 rupees. You see it, right? There's a gap.
And that gap is everything. The stock is trading at an 11.5% discount to the real value of what it owns. Now, this holding company discount is pretty common in the market, but it's also the central question every investor has to ask. Is this a flaw or is this a feature?
So, after looking at all this, what was the final call from the Web Cornucopia Finance report? Let's see what their ultimate conclusion was.
Well, the professionals seem to have a pretty clear consensus. Of the analysts who cover the stock, a solid 2/3 are rating it a buy. The overall feeling is definitely positive. They see real value here.
So the whole case for investing in this company really boils down to these four powerful points. You're getting top quality assets, management that knows what it's doing, a balance sheet that's built like a fortress, and you get all of that at that 11.5% discount, which the report basically calls a clear opportunity.
And to put a final bow on it, here's the direct quote from the report itself. They call it a compelling investment opportunity and a pretty straightforward way to bet on the growth of India's entire financial services sector.
Which leaves us with the million-dollar question, doesn't it? For an investor, is that discount a permanent trap you just have to live with? Or is it a temporary window, an opportunity to buy a fantastic empire for less than its sticker price? The answer to that question, well, that defines the entire investment.